you have to give gold a lot of credit because the environment that we're in, it's risk on, VIX is low, S&P all-time highs, NASDAQ at all-time highs, crypto basically almost at all-time highs. This is where a safety asset like gold should really be crumbling. It should be down significantly, and it's not. I mean, we are literally $50 away from new all-time highs on gold. So I look at that as being very bullish on gold. I also think that the central banks, I mean, one of the facts out there, the data points that central banks continue to load up on gold, yet the individual investor is underinvested in gold. And so for me, I always pay attention. If the central banks, the ones that print money, if they're buying gold, I have to pay attention.
Gareth Soloway, an established trader at verifiedinvesting.com, highlights a significant market phenomenon that could propel gold prices to an impressive $2,500 per ounce. Soloway suggests that such a breakout may be triggered by a notable correction in the stock market, prompting investors to seek refuge in the relative safety of gold. The gold market, currently trading near session highs and tantalizingly close to the $2,050 per ounce mark, has been buoyed by the latest report on consumer prices, which aligns with the Federal Reserve's preferred inflation gauge. Despite the initial market reaction to disappointing weekly labor data, spot gold prices are showing a resilient increase, trading at $2,050.40 an ounce as of the latest reading. Soloway emphasizes that gold has managed to hold its ground amidst an environment marked by low volatility, record-breaking stock markets, and the meteoric rise of cryptocurrencies. This resilience underscores its enduring status as a safe haven asset, providing a solid foundation for its current performance. Recent trends show that gold has been gradually recouping lost ground, a positive turnaround from its dip in 2024 when it hit a low of $1,984. Remarkably, gold's resurgence has occurred despite expectations for fewer aggressive rate cuts by the Federal Reserve in 2024. Initially, the year seemed poised for robust growth in gold as early as the first quarter, with market forecasts predicting as many as 6 separate 25 basis point cuts from the Fed. Soloway highlights an intriguing disparity between central bank actions and individual investor behavior regarding gold. While central banks have consistently been boosting their gold reserves, retail investors appear to be underinvested in gold. This observation suggests a potential contradiction in gold ownership between institutional entities and individual retail investors. Moreover, recent data from Kitco News reveals that China's gold reserves have risen for the past 14 months, signaling a sustained upward trajectory in gold holdings. December alone saw a notable increase, with China's gold reserves reaching 71.87 million troy ounces, a jump from 71.58 million ounces recorded in the previous month. Join us as we explore the insights shared by Gareth Soloway. Stay updated by subscribing to our channel and activating notifications. Thank you.
Looking at the chart, I mean, like you said, it's been sideways now for a long time, since 2020. But what I love to show people is that if you go back to kind of this period in here, in between basically 2013 and 2019, it basically was doing the same thing. In fact, we can draw a trend line that almost looks identical to what we're seeing. And if I zoom out here and we bring this over, you can see it's very similar in terms of how it was acting. And essentially what it was doing, it kept on hammering on resistance until it broke out. And then when it broke out, it went from 1,300 and change to almost 2,100. You know, the highs around 2,075 or so. So I think that's exactly what it's doing at this point as well. In addition, I do think that you have to give gold a lot of credit because the environment that we're in, it's risk on, VIX is low, S&P all-time highs, NASDAQ at all-time highs, crypto basically almost at all-time highs. This is where a safety asset like gold should really be crumbling. It should be down significantly, and it's not. I mean, we are literally $50 away from new all-time highs on gold. So I look at that as being very bullish on gold. I also think that the central banks, I mean, one of the facts out there, the data points that central banks continue to load up on gold, yet the individual investor is underinvested in gold. And so for me, I always pay attention. If the central banks, the ones that print money, if they're buying gold, I have to pay attention. So all of those kind of factors have me in alignment for a breakout. I think it's going to take a stock market swoon, if you will, so probably like a 10% correction or something. And then that money that will flow from risk assets to gold probably does break gold out, and we start to march towards 2,500 an ounce. So basically, the Kickstarter should be a daily close with confirmation above this trend line, right? So we can see we pierced it here, and it got rejected. We kind of closed on it. It got rejected. You really want to see a definitive close above. And what I like to see is multiple days above, right? So if to trust a breakout and understand it's not kind of a whipsaw move, you want to see it hold above this level for at least a few days, let's say 3 trading days. If it does that, I think it starts to draw an attention from players on the sidelines, institutions. They'll start to chase it, and you'll start to see this thing break to the upside. So I think that's that case scenario of what you're looking for. I'm a shorter term. I like to anticipate moves a little bit. So what I like is you have a trend line right here where if you can break above this downsloping trend line, you should at least retest that. And again, a couple other things that I think are positive on this gold chart dictating a future breakout. One would be what's called a head and shoulders, right? So if we look at a head and shoulders, an inverse head and shoulders, and you can see right here, this is your head and your middle point, right? And this is a classic pattern formation that, again, more often than not, yields to a big breakout. With in terms of calculation, you can calculate the target here. It should give us around a $2,525 target, $2,530 target, somewhere in that vicinity. But again, lots of positives here. And again, just going back to what we discussed really early on with gold, is that the fact that it's holding up as well as it is in spite of a VIX where it's super low, meaning it's risk on with the stock market, with crypto, to me, that's the bull case right there. I mean, gold in any other scenario should be down 10, 15, 20% from its highs. And here gold is within a few percent of its highs. I brought up Newmont Mining's chart here. It's a great example. It has been a horrendous trading vehicle, especially with markets generally that are at or near all-time highs. And we can see that Newmont Mining is down to levels that it last saw in 2019 and 2018. And really the answer to this is very simple, right? Is that, we've gone through this period where inflation surged dramatically higher. It's still elevated at 3.5%, yet gold has not kept up, right? Gold's price has not gone higher than where it was in 2020 when inflation was essentially 1%. And so the poor miners out there, I mean, if you're a Newmont Mining company or you're one of the other miners, they're paying their employees probably 20% more than they were. Their equipment costs more than it was prior. I mean, all of their input costs are higher, but they're not getting 20% more on gold right now. So their stocks have suffered, but I do think there's an opportunity here. And I do think that, at some point when gold does break out, the miners will be a catch-up trade and you'll see them surge dramatically higher. Just the question is, when does that breakout occur? But it's really that inflation with no advancement in gold that has hurt the miners so much.
The price of silver surged above the significant $20 per ounce mark in 2020, marking a 4-year high and ushering in a period of sustained strength. The precious metal has remained notably above this level, occasionally breaching the $26 mark and even soaring as high as $29.59. Silver has not yet surpassed the elusive $30 milestone, despite these impressive gains. Gareth Soloway believes that silver's continued performance may remain subdued until the United States emerges from its economic downturn. This divergence in silver's trajectory is attributed to various factors, including economic struggles in China and the looming specter of a recession in the U.S. Meanwhile, Keith Neumeyer, CEO of First Majestic Silver, has been vocal about his belief that silver has the potential to surge to even greater heights, possibly breaking through the triple-digit barrier. Soloway emphasizes the significance of silver breaking out of the trend line at around $25 per ounce. According to Soloway, this milestone would significantly bolster confidence in the metal's bullish prospects. Let's get back to the interview.
What is your perspective on where silver is headed if gold breaks out here?
Yeah, so number one, we have this long wedge pattern, right? So it basically has told us that since the run from 2020 to the lows to the highs here, where silver went from 11 and change to about almost 30, since that point, it's been sideways action, much like gold, right? The only difference with gold is gold has essentially gone flat, right, like this, while silver has been decreasing. And you're right, that's the industrial side. So we have China that's in a big issue economically, right? The U.S., we're still wondering, are we going to avoid a recession? Or are we going to have a soft landing? But I think that's the kicker here, is that silver has underperformed because of places like China having such a rough time economically. Now, having said that, if gold breaks out, silver likely will eventually follow. But I do think if the U.S. does hit a recession, it follows at a slower pace, at least in the beginning. Generally, over the longer term, silver has much more volatile moves. But I do think in this next phase, if the U.S. does go into recession like I think it will, then you likely see silver continue to lag until we come out of that recession, which is when silver should take over. If you're looking at silver, you really do want to see a breakout of this trend line here. We could see, again, just a line that connects all of these highs all the way down. And so you're looking for a move above. Really, you want to see it stay above basically $25 for a couple days. That would give you more confidence. And then same thing on the downside. If it breaks here, let's say it breaks below and stays below 21.75 for a few days, that would be very concerning that at least you would be dropping to maybe as low as 18 and change. So again, much different viewpoints. The riskier trade is the silver trade. The gold trade to me is the more secure, safer investment at this point, at least with the looming potential for that recession in the U.S. So you're right. It's been a really long time. I mean, historically, it's one of the longer times we've had an inverted yield curve. And exactly like you said, is it's important for people. People always freak out when the inversion occurs. What they don't recognize is that the recession doesn't hit until it uninverts. And so my guess is, again, later this year, probably second half of the year. I also think it'll happen a lot quicker. Like once we start to see the uninversion occur, it's going to be like a domino effect to the downside. And I do think that, again, the markets will react. We see very much similar situations in the financial markets to what we saw in 2021 before the NASDAQ dropped about 40%, right? We see these stocks like NVIDIA and SMCI and these big players just continuing to soar higher. And then even recently, we've seen Bitcoin just today surging up dramatically with people chasing willy-nilly. And again, those are signs of a financial system that is abundantly full of liquidity, but it's also a sign of a top with euphoria.
Saxo Bank, a renowned Danish financial institution, remains steadfast in its optimistic outlook for gold and silver. The bank anticipates a bullish trajectory for gold, with prices potentially reaching as high as $2,300 per ounce within the year. Additionally, Saxo Bank sees significant potential for silver to revisit its 2021 highs, which hover around the $30 per ounce mark. That's all from us. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.